Hello, good morning everyone. Welcome to our special webinar, Old and New Tax Regime, which is better. My name is Jignesh Parikh. I am Chief Knowledge Officer of Laabdhi Investment and Financial Consultancy and host for today's webinar. Today we have Mr. C.K. Dnyaneshwar Naykodi. Who is a speaker for our today's webinar. Dnyaneshwar Naykodi is a partner in Hemal Parikh Company LLP and is specialized in direct taxation and international taxation since from 2011. Hello Dnyaneshwar, please welcome for our today's webinar.
Yeah, good morning, Jignesh. Thank you so much for the warm welcome and providing me such a good opportunity to express my views on this respective topic. Over to you, Jignesh.
Yeah, thanks Dnyaneshwar. Before we starting to webinar, there is a good news for our first 21 salaries class participant, those who have registered and will stay till this end of this webinar. We have something very exciting that we will give you. We will announcing the surprise at the end of this webinar. So stay tuned. Dnyaneshwar, can you give some idea on the current economy situations?
Jignesh, you are talking about the COVID-19.
Yeah.
Yes, the COVID-19 has now become a major issue for the India. The major industries has been impacted, and I'm looking at this particular situation in a different way. This COVID-19 period has given us an opportunity to rethink on our business model. Business owner may think about their strengths and weaknesses, and I'm positive our Indian economy will take a U-shape in the coming years. And if Jignesh, I'm talking about current May month, I'm assuming at the end of the May month, we get some relaxation from central government, and our economy in the coming quarters will work up to 60 to 70% of the capacity, and slowly it will reach to the 100%. But definitely, Jignesh, it requires the support from the central government, fiscal push-up from the government. There should be some money in the economy. So let's wait and hope for the best in coming years. Over to you, Jignesh.
Yeah. Thank you, Dnyaneshwar, for giving us input on the current economy situation. Dnyaneshwar, the current year budget has come, which is good and announced by the government in the February. As the government is predicted, it will boost our economy, and in the couple of years, our GDP will reach to nearly $5 trillion economy. But many people having the questions on the income tax that should I go for the regime 1 or should I go for regime 2? Can you give the details to all our participants?
Yes, this concept of the old regime and new regime come into picture when the respected finance minister has come up with the finance bill 2020, and they are giving us an option to go for the new regime. But with the same old regime is remain exist, so taxpayer may go for the old regime or new regime at the beginning of the financial year 2021. So we are also receiving the similar queries from our clients from the Feb month. So Jignesh, before we will have a detailed discussion on this particular topic in upcoming slides, but three things I'm assure you, after a detailed discussion, three things will be clear. First, what is the concept old regime and new regime? Second, to whom it's applicable? And third, how to choose the option. So for a better understanding of this concept, I request you, Jignesh, to please have on a screen the comparison of old regime and new regime slide. So if you see on your screen, Jignesh, there are two options reflecting. In the first option A, there is a no tax. Means if taxpayer having an income up to rupees 5 lakh, there is no tax. आपका 5 लाख रुपए तक टैक्स है, आपको 5 लाख रुपए तक इनकम है, आपको टैक्स भरने की जरूरत नहीं है. Now comes to the B option. In the B option, taxpayer having an income above 5 lakhs, and what I have done in this particular table, I bifurcated the income in a range like 2.5 lakh to 5 lakh, 5 lakh to 7.5 lakh, 10 lakhs to 12.5 lakh, so on. And against the respective range, we have a rates defined in the old rate and the new rate. So suppose to take an example of the 7.5 lakh. In the 7.5 lakh, tax rate is 20% in the old rate. That's a high rate. Then in the new rate, that is a 10%. So clear concession of 10% is available in the new option. If you go with the new option, then take another example. Suppose you have an income, taxpayer having an income up to 15 lakhs, then tax rate is 30% maximum rate in the old regime, and in the new regime it's a 25%. So again you get a discount of the 5%. So finance central government has come up with the concessional and discounting rate in the new regime, so it's attractive. But Jignesh, hold on. This new regime has come up with some hidden condition. Hidden condition is exemptions and deductions which are available in the old regime that are not available in the new regime. So there are some exemption deductions which are not available in the new regime. So please take a note of it while selecting the new regime. So over to you, Jignesh.
Thanks, Dnyaneshwar. If I understand that regime 2, there is a concession in income tax rate has given, but as you mentioned, in the regime 2, exemptions and deductions are not available. Can you give the informations which exemptions and deductions are not available in regime 2 to our participants?
Yes, there are certain exemption deductions which are not available in a new tax regimes. As you see on your screen, Jignesh, take an example of the taxpayer having a salary source of income. So standard deduction, entertainment allowances, well-known profession tax 2,500, then house rent allowances. These are easily available options for the taxpayer in the old regime. But in the new regime, these exemptions and deductions are not available. Then, if the taxpayer having a house property source of income, the interest component we are paying on the housing loan that easily available in the old regime. Again, that is not available in the new regime. Then comes to the other sources. Has well-known family pension if the spouse is receiving the family pension on the behalf of either the wife and husband. Well-known deduction 15,000 is available in the old regime. That is also not available in the new tax regime. And major impact of the new tax regime is on the fourth slide. If you are paying the premium for the life insurance, you are putting the amount in the PF or any other saving schemes, or making a payment of the tuition fee. These are the exemption and deductions are not available in the new tax regime. So for a better understanding of this concept, let's have a Mr. X example on the screen. What I have done in this example, Jignesh, I'm assuming the Mr. X having an income in a range of 7.5 lakhs, then 10 lakhs and 15 lakhs. Okay, now take the example of the first range. If the Mr. X having an income 7.5 lakh, in the 7.5 lakh in the old regime, as I said, exemption and deductions are available. Standard deduction 50,000 available, then deduction ATC 1,50,000 is available, then ADD mediclaim is also available. So 7,50,000 reduces to 5,25,000, and tax rate is arrive on 5,25,000. It's just 18,200. And if comes to the new tax regime, straightforward 7,50,000 is taxable. As I said at earlier, some exemption and deductions are not available. So tax calculated according to the concessional rate is 39,000. So clearly a benefit of 20,800 has been available to the taxpayer in the old regime. The same thing has been happened in the second regime and the third regime. If the taxpayer having an income 10 lakhs or the 15 lakhs, exemptions and deductions are available in the old regime. And if we calculate the tax according to the old regime, that comes to less, and benefit of 49,400 and 54,600 respectively in the regime has been available for the taxpayer. Means taxpayer save this respective amount by putting the amount in a saving and investments option. So with this, taxpayer may confuse, as at the beginning I'm saying that concessional rates are available, and now I am talking about old regime is preferable due to the exemption and deduction. So taxpayer may have some doubt in a mind, but let me conclude my view on this point. Jignesh, I'm coming with the two rules. If taxpayer having an income in 8 to 12 lakhs, then it makes sense for him to sit with his professional advisor to do some calculation on a paper and then take a call either to go for the old regime and new regime. And if the taxpayer having the income up to 15 lakh, then as per my view, let's go with the old regime. So over to you, Jignesh.
Thanks, Dnyaneshwar, for your input on this. Uh, Dear participant, there is a, polling question. Polling round is there. Okay, one polling question. It is going to come on your screen. Do you? This question is that: do you understand the old and new regime just by saying yes, or you want more information? Okay, we are going further for our webinar. Continue, and Nanshwar, you had given us really a good examples and detailed explanation, so anyone can simply understand that should go for regime 1 or regime 2. But if I understand Mr. X having the income of 7.5 lakhs, if he opt for regime 1, after all the deduction, he will save approximately rupees for 20,800, which is nearly a 50% of his tax. And if a Mr. X having income of rupees 10 lakhs, if he opt for regime 1, after all the deduction, he will save approximately tax of rupees 49,400, which I can say nearly 5% of his annual income. And if Mr. X having the income of 15 lakhs, if he opt for regime 1, he will be save approximately rupees 54,600 is as I understand. Also in the regime 1, if I will go, I will save my money also, and I will save my tax also. Now we are just stopping our polling questions. Okay, right now I'm receiving the polling questions reply. I'm so excited that many questions people's these questions, many people are saying yes. Thanks to all our participants. Okay, now we are going for the second part of our webinar. Okay, Gnaneshwar, please give the details, some informations about which are the tax saving options are available as a deductions to our participants.
Uh, Jignesh, saving and investments options are available under the ATC and ATD. So before going into detailed discussion on the saving and investments option that are available to taxpayer, let me clear one thing. A lot of times what happens, taxpayers look at it where their friends or the colleagues have done the investment and trying to follow that pattern. But let me tell you, Jignesh, this is not a right approach. Putting your hard-earned money just by following the others, it will not work. Taxpayer should aware of the options that are available to him, then should sit with his investment advisor and then take a call. So before going into a detailed discussion on the investment options that are available in ATC, let me give a brief about the ATC. Now ATC has been introduced under the Income Tax Act by central government, and it's applicable to individual and HUF. Then benefits of saving and investment basically available up to 1 lakh 50 times, so 1 lakh 50,000. Certain time it's extended till 2 lakhs that I will cover in the coming slides. And 1 lakh 50,000 will be reduced from your total income by just putting the amount in the saving and investment. So what I have done, Jignesh, the saving and investments option I have bifurcated into the categories. The first category is the non-extra investment. Second one is the insurance option. Then third is the national pension. Fourth is mutual fund, and second next is senior citizen savings scheme. So let's start our discussion on the first option, that is a non-extra investment. Now in the non-extra investment, the first option I'm taking is the EPF. This is an employees provident fund. When the taxpayer is an employee either in the private limited sector or the public limited sector, PF is deducted from his salary, so his contribution is eligible for the tax deduction. So money guaranteed, money what is the contributed again on the guaranteed income, and in this option he earned the interest up to 8 to 9%. Again the option whatever the gain he's received by putting the amount in the EPF is a tax free, and risk is very low in this option, but we get a less liquidity in this option. The second is the home housing loan. When your taxpayer is buying the property and he may apply for the housing loan, he start paying the installments. So principal component of the installment are eligible for deduction under this option up to 1,50,000. Then comes to the tuition fee. Tuition fee This tuition fee is available if the parents is a taxpayer is the parents, and he is making a payment of the school's fees admission for the children. Then this tuition fee is eligible for the deduction, but subject to the two children. So these are the three options are available under the no extra investment. Jignesh, इसमें आप आपकी other needs complete करते हैं, उसके साथ आप eligible होते हैं deduction के लिए. So you should not require to pay to get the additional amount for the deduction. So over to you, Jignesh.
Yeah, great, Gyaneshwar. Means if I am having the housing loan, if I have the employees provident fund and the tuition fees, for that no extra investment I have to do. It will cover up in my ETC, which is good, Gyaneshwar. Please go ahead.
The second option available for us is the insurance option. I'm talking about the life insurance. When you are paying the premium for the coverage of the family members and himself, you are eligible for the deduction, whatever the premium is paid. And again, the investment is a tax free at the end of the respective period, but subject to the 1010D provision of the income tax. If the premium paid is less than or equal to 10% of the sum assured, the consideration received at the end of the insurance period is a tax free. So what are the options available, Jignesh, here to taxpayer is the term insurance, endowment plan, and ULIP. This is again the attractive option. Now let's comes to the third option, that is the next national pension scheme. This option, taxpayer get opportunity invest 75% into the equity and 25% into debt. Again, it's a market linked product, but this product take care of your inflation issue because you are getting the interest rate in the range of 9% to 13%. Again, market linked product, so the risk is moderate and liquidity is very low because the amount is blocked till the completing the age of the 60. And another attractive thing of this option is you're getting the additional benefit of 50,000 if you're putting the additional 50,000 under section 80 CCD. Then your eligible deduction amount comes to 2 lakh, मतलब आप 2 लाख रुपए तक का deduction के लिए eligible होते हो. So this is the national pension scheme. Then next comes to the mutual fund. Mutual fund again is a good product. It's a market linked product. Again, it will take care of your inflation issue. Then very important point here, Jignesh, if you're looking for a immediate starting of your investment, this is a good product. You can start the SIP. SIP can start between 3,000 to 5,000 easily. And one thing should be take care, mutual fund to be selected, that is linked, equity linked option. Mutual fund should be equity product. Then again the risk is moderate because the market linked product, but high liquidity. आप कभी भी चाहिए तो इसमें से पैसा निकाल सकते हैं आपके इमरजेंसी के लिए. So this is again good option. Now let's comes to the fifth option, that is the senior citizen savings scheme. Now the senior citizen scheme is available for the has a senior citizen I'm talking, so the available for the taxpayer who reach to the age of 60 or more. So whatever the fund has been received on the retirement, we can put it into this option. This option also available for the taxpayer who are taking a voluntary retirement at the age of 55 to 60 range. And maximum amount you can put is 15 lakhs. आपको retirement से जितना पैसा आता है उसमें से 15 लाख रुपया max to max आप डाल सकते हैं. Then locking period is 5 years. Interest is taxable, but government has come up with a new exemption here. Up to 50,000 there is no tax. आप interest 50,000 तक आ रहा है आपको, then under section 80 TTB tax is 0 up to 50,000. Above 50,000 tax is there. Then interest rate again attractive 8 to 9%. So these are the attractive options available for taxpayer, Jignesh. First one is, as I said, insurance, then the national pension scheme, then mutual fund, then this one senior citizen savings scheme. Over to you, Jignesh.
Thanks, Dnyaneshwar. Very attractive options you had given, means explain in the details nearly. First is the insurance, okay. Second, which is a NPS. It's a really NPS about, you have talked about the, there is an additional 50,000 in the 80 CCD. Anyone can get as a tax benefit for additional over and above 1,50,000. Mutual fund is no doubt of the today's one of the hot subjects for everyone. and it's a really a 5 years, it's only a 3 years locking, so anyone can use that money for their for your short term purpose. He can utilize that money. And senior citizen, I know that many senior citizens have no idea about the senior citizen savings scheme. Really, this if input they will get some idea that they can invest in under section for this senior citizen savings scheme, and they get their capital safety also and their return. Thanks, Nyaneshwar. Before I further going into discussion, I would request to our participant to go to the question sections of dashboard and ask the question. If you have any question related to your tax planning, we will answer your question at the end of this webinar. Okay, so we continue for further our webinar. Gnaneshwar, is there any other deductions are available in other than all these five? Is there any extra deductions are there in the ATC?
ATC is again I said there are many options are available for the taxpayer is an exhaustive list, but let me cover 2-3 other deductions also. Other deduction is available for the taxpayer is a Samruddhi Sukanya Samruddhi account. Again, this is an attractive option available for the taxpayer. This is specially designed for the girl child for her bright future, and whatever the amount invested is the tax free at the end of the particular period. And this option is available under the post office and designated bank. So Jignesh, we can go ahead with this option if you have a girl child. Then another good option available is the fixed deposit. If you don't want to think much about the options, you can straightforward do the fixed deposit for the 5 years. You are eligible for the ATC deduction. And this product, fixed deposit, can be used for the short-term planning. If you are planning to buy something in coming 2-3 months up to 1 lakh rupees, then you can go for this plan. It's specifically designed for the short-term goals. Again, return is available 6 to 8%. High liquidity product. You can आप कभी भी FD तोड़ सकते हो as per your requirement in emergency. Risk is very low because supported by the government. RBI का आपको support है इसमें. Then this fixed deposits can easily made at the bank. So these are the two options are available for the taxpayers. Over to you, Jignesh.
Superb, Gnaneshwar. Thanks for all your input on detail, and it's a detailed discussions. If you have given for under section ATC, if anyone can save up to 1,50,000 and he can save in ATC and rupees 50,000 in NPS through ATCCD, which is really means totally anyone can save in 2 lakhs and he can deduct as a deduction and save the tax also. Okay, Gnaneshwar, can you give details of other deductions other than ATC, like mediclaim or education loan, something is there?
Yes, right now, as at the till this particular session, we are just discuss about the options that are available under the ATC. Now let's take other options that are available for the taxpayer, like a ATD and other options. Let me start with the ATD. ATD is another good option available for the taxpayer. If the taxpayer eligible for the deduction, if he paid the health insurance premium for himself and his family, so this is a good option. And this option is available for the family members like your spouse, children and parents. That's the first thing. Second, deduction is available in a range of 25,000 to 1 lakh. So suppose Jignesh, you take the mediclaim or take cover of the health insurance for yourself and your children, then you are eligible up to 25,000, and you put an additional member like your parents into the option, then you are eligible for an additional 25,000, so it goes to 50,000. But if your parents are senior citizens, then you get an additional 25. So your senior citizen deductions available is 50,000 and your 25, मतलब आपका 25,000 और पेरेंट्स का 50,000 मिला के 75,000 तक आपको मिल सकता है. और suppose taxpayer himself is a senior citizen and parents is the senior citizen, then deduction goes to 1 lakh rupees. And then Jignesh, this is a very good product. If any family member is hospitalized, you know the expenditure easily goes above 1 lakh rupees. So it's better to go with this product and insure your family for the health. So other than ATD, we have the very good options available like educational loan. If you are pursuing the higher education and you are apply for the education loan, then whatever component of the interest is paid is eligible for the deduction. I think up to 7 to 8 years. Then whatever the contribution you are paying to the society, like putting a donation to the particular religious trust or the social uh, who is carrying out the social activity, and you're putting the fund for them, then you are eligible for the deduction up to 50, up to the 50%. मतलब आपने 1,000 rupees डाला for the donation, 500 rupees you get a deduction. So these are the other saving options are available for the taxpayer. So let me conclude my view on saving and investment, Jignesh. Two, three things to be taken care by the taxpayer. First, by putting the amount in a saving and investment, up to 45,000 to 46,000 can be saved by putting 1,50,000. Then saving by making a saving and investment, you develop your saving habits. And third thing, as at the beginning I said, taxpayer should not have a mentality that just because of the parents or friends has done the investment, just because of the tax window is available, we should not take a decision. Let's wait, discuss with your investment planner. Please align your saving and investment objective with your future goal. It really help in long term. So over to you, Jignesh. That's it from my side.
Yeah. Thank you, Gnaneshwar, for all your inputs on this ATD and all other directions also. I also means a few days back, because as you have said, the ATD like a Mediclaim, anyone can do up to 25,000 self and family, and for parents and senior citizens, they can matlab, from 25,000 to 1 lakh, they can save their tax planning.
Yes, yes.
But as yeah, thanks. And one of the mediclaim is also, as you have said, one of my client has called me, Jignesh, my mother has got she COVID problem, but he has asked, firstly he's asked me, Jignesh, I have a mediclaim for my mother, I don't, but I have a brother, I have. So because of that, he has planned something for if COVID problems will come, so they can means financially they some get the backup of that. Okay, thanks,
Sure, sure.
Ganeshwar, for all your inputs on this. I also request to all our participants, if you have any questions for today on your for your tax planning, you on your dashboard there is a questions is there. You can write us on. We are now on the question answer round is there. So we will take your questions if whatever the time is availability. But you can write us on, so we will give the replies on that. Yeah, Nashwar, there is a one question which has come from our viewers, Ganesh from the Indore. Okay, if anyone having receiving the salary and in that component, if he's receiving the HRA component, okay, and if he's paying the rent, can he claim? I mean, he pay the less tax and by paying the rent on that?
Yes, yeah, HRA. HRA is again
Yeah,
a good option available for the taxpayer. As you said, the respective attendee saying that the HR is a component of his salary structure, then he can go for the HRA option. But two, three conditions to be taken. First of all, he should be staying at let out property, rented property. He should not having his own property in respective metro city, and you can go ahead with this option. There are two, three rules that to be taken. Again, I request him to connect with his professional advisor and take a call.
yeah. Thanks. Thank you, Gnaneshwar. We have another questions also, which is Pankaj from Ahmedabad. He is asking, okay, should we have to inform our employer which regime I want to go in the beginning? Now it is the beginning of this year only. Okay, should they have to inform, and at the time of filing of income tax return, he can change from regime one to regime two. Is that possible, or vice versa
Yes,
also?
yes, Jignesh, this is again a very good question from the attendee. Uh, with this old regime and new regime option, as we are discussing in the whole complete session, that option is available. So what we recommend to the taxpayer, if the taxpayer having a salary income, he should communicate his call either to go for the old regime or new regime to his respective payroll department at the beginning of the financial year, first thing. And at the second, at the end of the completion of the financial year, when he seek for the filing his income tax return, still he have an option either to switch off the call, either to go. If he selected the old regime, he still can go for the new regime at the time of the return filing. So in short, the option is available at till the time of the return filing, but this is for only for the salary person. If you are a business person, you have to select the option at one time. You don't have a choice to take a second thought on this.
Okay. Okay. Yeah. Thanks, Nashwar. And also, it that one question is also connected with that. Means for last year, if someone has gone for regime one, okay, and he current year second year means next year, if the this same tax regime will continue, can he same country means he want to change, he can change it?
Salary person is a salary
Yeah,
person.
salary. Yeah, yeah, yeah.
Yes, yes, the option is available for each and every financial year. Open for you.
Okay, okay. Yeah, thanks. There is another question also come from the Kamal madam. If due to the COVID, okay, in the month of March, the COVID problem has been started, but she cannot invest her in the under section 80C for last financial year and 80D also for last financial year 2019-20. Can the government has given some relaxation that they can do some investments in the till current year so they can claim for last year? Is that possible?
Yes, Jignesh, because the COVID-19 has started impacting to our Indian economy from the Feb month, and as you know, the lockdown has started in the March month. So many people are planning to do the investment at the last moment, but they are not able to due to the lockdown. So government has come up with a relaxation option is available till 13 June. So you can take a call to make a investment in a selected options, and you are
Yeah.
eligible for a deduction under financial year 1920.
Okay.
But
Yeah.
investment to be done before 13 June.
Okay, means before 30 June, if anyone can save for his tax saving in under section 80D and 80D, he can claim in for this current year. Right. Thanks, Dnyaneshwar. Thank you. There is a one also questions which I really say from not in India. Our viewers are seeing this webinar. There are outside India also some of the
Oh,
viewers are
great.
seeing. Yeah, that's a really a good our webinar, which really helpful for many people. The question which has come from is there a capital gain tax? Can you give the details on that? Mr. Vishal Gaikwad from the Dubai, he has asked.
Capital gain again a different cup of tea. Right now we are discussing about the saving and investment and discussion on the old and new regime. In the coming months, if you allow me, then we will have a for the second different webinar on this, because right now long term and short term both are the gains are taxable. So I request
Okay.
you to connect us off by connecting on the email ID. Email ID shortly will reflected on a screen. You can share the complete details. This representative will connect you.
Okay. Thanks, Anish. Thank you. There is also another question. He's a senior citizen. Is asking that is there any special tax rates for senior citizen?
Special tax rate is not there, as we discussed. There are concessional rate, but there are and also we discuss about the senior citizen saving account. That is a option is available, and up to 15,000 other sources interest is tax free. So there is no special rates are available for the senior citizens.
Okay, thanks. Thanks, Ashwar. Nashwar, that is this is one of my I like it. That is why I'm asking these questions. Okay, uh, I have done my HF few years back. Okay, one of my CA friend. Okay, he has given me the idea that you should create your HF. With that, some tax planning will be possible. Okay, so and now what I do, many FDs and all I do from my HF. So this is also it will be helpful to our participants. Can you possible to give some idea?
Means Jignesh, you have a HUF account.
Yeah.
Oh, that's a good tax planning. Jignesh, HUF is a very attractive tool. Many taxpayer don't have an idea of the HUF. You can go for the HUF, as you said, that if you have a passive income, fixed deposit, you have a interest on the fixed deposit or the bond interest, you can easily transfer to the HUF. Again, it's a detailed discussion. It will take a 5 to 10 minutes. So better have the discussion of the record, Jignesh. I will connect you. But again, it's a
Thanks.
good
Thank
thing.
you. Yeah, but thanks, Dnyaneshwar. There is a one question it also come. Insurance policy which is maturity is taxable or not? There is some maturities as taxable or not taxable, because other investments like fixed deposit, mutual funds, are at the maturity that are taxable. So this question has come from the Mukesh from Mumbai only. So can you give the details on that?
Like some are the saving investments are tax free. As I said in the beginning, national pension scheme product is tax free at the maturity. EPF is a tax free. Then as a in respect of insurance, we take cover that point in our webinar. That maturity is a tax free but subject to subsection 1010D. Your premium amount should be less than the sum assured by 10%. There is a condition, so that to be take care, otherwise it's a tax free.
Okay. Yeah. Thank you. Thanks. Means as you have explained, there is some calculations are also coming.
Yes, there
Yeah.
is a
Thank you,
condition to
Gnesh.
be put.
Yeah. Thank you. Thank you, Gnaneshwar. There's a one question. It has come from the is further investments in running PPF deposit it advisable for individual having the less than income of rupees 10 lakhs as of taxable?
EPF is again attractive option. As I said, don't take a call immediately. You sit with your investment advisor, but EPF is an attractive option. But you have to compare the EPF option with the national pension scheme and then take a call, because the national pension scheme, as per my view, giving a better return.
Yeah. 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 Hello. Yeah, thanks, Jennifer. Thank you.
Yes,
There's
yes.
one more also question, which is what will be the effect to the our new regime, tax regime on our investment portfolio?
There is a has a in the new regime, you don't are eligible for the investment. You are not eligible for exemption and deduction. So if you are going with the new tax regime and you are making an investment, then you are not eligible. So as far as I will suggest you, if you have a good investments, then let's go with the old regime because you are eligible.
Okay, yeah, thank you, Gnaneshwar. There are we have, I know that we have a time constraint, but
So many
two, three
questions,
more
yes.
questions. Yeah. Because many viewer, I think so, they have liked this our webinar, so they have no doubt always in any program means like webinar or anything. There is a questions more are coming means we have to understand that many people have taken the means they have taken the good initiative to understand the program. It's really I like it. Today's our participants are sending really good questions. I like it that one question which has come is can you please advise on investor safety of FD in bank nowadays? What should be our maximum exposure to the FD to ensure on some is insured? This question has come from the Vidur from Mumbai. So
Means
I
he's
think so.
talking
This is
about
not yeah.
he's talking about
Yeah,
the safety of FD.
safety, yeah, it is not. I think so. It's not for
It's
our
not
means
related to the
related
taxation,
to that. Right? Yeah,
but I just give a small idea.
yeah,
Don't put it your complete hard-earned money into one bucket. Try
yeah,
to put it amount in a different buckets. It really help you.
yeah,
Give you
yeah,
some percentage in a FD, some percentage in the mutual fund, and so on.
yeah. Okay. Thank you. Thanks, Gyaneshwar. Yeah, means don't like Warren Buffett have the statement, golden statement. Don't put all egg in the one basket. Yes, we
Yes,
have
yes.
to put in the different baskets. Yeah. Thank you, Gyaneshwar. There is a one question that has come from the Hitesh from the Delhi. What is the purpose of government to introduce the new tax regime along with the old tax regime?
I don't. I think so.
Yeah,
I don't have a brief idea about what is the exact thought of mind behind that. But as per my
uh,
understanding, and as I'm discussing in my profession with my professional colleague, right now, central government is focusing on a GDP. They wanted
yeah.
some extra revenue for their government activity. So I do. I think so. For that particular purpose, they come up with a new regime.
Okay, great. Means I think so. With this, which I had in the beginning only, I had taken the
Yes, you
questions
said the
of that.
beginning.
Yeah, means government want to 5 trillion GDP. means like you have said that by this way they will it will be the reach. Thank you, Ganeshwar. Thank you. There is one also question from Jayesh from Jayesh has come. My daughter annual package is rupees 8 lakhs. Interest on housing loans would be rupees 25,000 uh, upcoming years. No other investment till now. Which new old tax criteria would be profitable for her? Rental flat of 60,000 on other income up to 1 lakh. I please is asking. I think so. There is some calculations is required. But if you
Yes,
can
yes, we
add
have to
on
do
point.
this. Yes, we have to do the calculation. So I request him to
Yeah.
sit with his professional advisor. But again, then there is a scope for the investment in the ETC.
Okay.
As for the
Okay.
points
Okay.
on by taking into the facts that come in right.
Yeah. Thank you, Gnaneshwar. Now we have some time constraint, so already we have given the maximum questions of answers. Okay. Now we are concluding to the our webinar. Okay. As I said in the beginning of the webinar, those salary class first 21 salary class register participant until this end of this webinar, if they continue, we have some surprising from that. For them we will do their tax planning, which we normally charge the fees for that, but for them, for that 21, because the that Gnaneshwar has given me the input previously. I said that it is the 15, but Gnaneshwar, really thank you have added, because 21 which is one of the good बोलते हैं ना शुकन का माना जाता है. So 21 we can say it's really a good number which we can say. So those 21 viewers till this end of this webinar, I know that all our participants are from the beginning till the end, they are continue. So that 21 salaried class viewers, those who have registered for our webinar until they are continue, we will contact with them, we will touch with them, and we will help them for their tax planning. Okay, I really thank you to
Okay.
our speaker Gnaneshwar for all your valuable inputs on how can individual do their tax planning on the like new regime, old regime, investments in ATC, ATD, all the details you had explained in a better way. Thank you, Gnaneshwar. Thank you. I really say.
Thank you so much,
Yeah,
Jignesh.
thank you. And I really, this webinar is with our success is not possible without our participants. So I thank you to all our participants, and I definitely say they have got some good idea on their tax planning. For more details, you can visit on our website www.labdhi.com. You can email us for your any query income tax at labdhi.com. Our board number is 0224975 3300. You can connect to our income tax team. As I also said in the before concluding this, due to the time constraint, some questions are also coming. Don't worry, we will give you the your answer questions of answer after this means conclude of our webinar. We will be in touch with you, we will give you the answer of your questions, so don't be about worry about that. Now today's webinar we are going to upload on YouTube, so you can revisit that, and you can means get your knowledge also and update yourself. And now with this I concluding my webinar, and I thank you, Gnaneshwar. Thank you to all my participants. Thank you.
Thank you.
Now we are concluding this webinar. Thank you.
Thank you so much.
Yeah, yeah, thank you.